Greetings! We're going to look at the top 4 reasons you should own gold in 2021. You may have been thinking 2020 was a chaotic year and you don't know what to expect in 2021. This can make picking a good investment very difficult, and today I'm here to share 4 great reasons that you should own gold in 2021. My goal is to share what I know and get the best possible information I have to you. The information in this presentation is factual and taken from publicly available sources. It is not advice. Any opinions expressed here are for the purposes of sharing a point of view for educational purposes. If anyone should act on any of this information, it is solely their own responsibility. Do your own due diligence and research before making an investment of any kind, whatever that investment may be. Please be sure to like and share this video and subscribe and click the notification bell so that you know when we post more content like this in the future. Today, I'm going to cover who owns gold, why its price is expected to go up, how it has performed historically, and its high liquidity. So who owns gold? Ray Dalio is the founder, co-chief investment officer, and co-chairman of Bridgewater Associates, the largest hedge fund in the world. His firm totals $138 billion in assets under management. The financial world takes Ray Dalio and Bridgewater Associates very seriously, and that is why it's important to look at what they are holding as investments. As of September 30th, 2020, Bridgewater Associates held 11.4% of its 13F managed securities in GLD, SPDR Gold Shares ETF, which is an exchange-traded fund that holds physical gold and is supposed to correlate with the price of gold. This is second in their holdings only when compared to SPY, SPDR S&P 500 ETF Trust. Over the last 2 years, this GLD fund is something they have been increasing their holdings in, along with the materials sector, and they have been selling their holdings in the finance sector. GLD is the world's largest physical gold ETF, holding a total of $71 billion in assets as of January 11th, 2021. The likes of Ray Dalio and Bridgewater Associates would likely invest in gold, GLD, as a way to invest in physical gold. This is apparent from Ray Dalio's famous quote at the World Economic Forum in Davos 2020 that cash is trash. And as we can see in the last year, since he has made that remark, GLD has done quite well relative to US dollars. And this is also true for other major fiat currencies. Why is gold expected to go up in price? There are many that believe that a historical price of gold is positively correlated with the money supply and interest rates. Alan Greenspan, famous economist, former chair of the Board of Governors of the Federal Reserve, used to use the $400 per ounce price of gold as a market metric to determine whether his monetary policy is too loose. In this article, written back in 2004, he discusses how he was targeting a $400 per ounce price target. As we can see over the last year, especially since the March lows of 2020, gold has performed quite well, increasing in price by as much as 25% from the start of the year. This goes hand in hand with the money supply as seen in the nearly 65% increase of M1 money stock over the past year. For those not familiar with M1 money stock, it can be thought of as all physical currency, checking accounts, and other cash in circulation, not including savings, CDs, and other financial assets. That means a whopping 65% of cash currently in circulation was created in 2020 alone. Another way to think about it by some, such as Danielle DiMartino Booth, author of Fed Up, former Federal Reserve insider, she says that gold is negatively correlated with interest rates on the 10-year U.S. Treasury bond. If interest rates go down, then the price of gold is expected to rise, and that's exactly what happened in the last year. Although there has been a bit of a move upward lately, the incoming U.S. president, Joe Biden has promised to spend more money and ignore the deficit, which is likely to make the price of gold go even higher. We can see from public statements made by officials at the Federal Reserve that interest rates are expected to stay low and that there wouldn't be any rate hike until 2022 or maybe even 2023, according to Atlanta Fed's Bostic, and according to him, a lot would have to happen between now and then to get us there. Historical performance. America has been off of the gold standard since August 15, 1971. From that time, gold was around $40 per ounce, and it ended the year 2020 around $1,900 per ounce. That's a return of 47.5 times. And when compared to the S&P 500 over the same time period, we see an increase from 73 to 3,799, which is 52 times. Although that is more at the moment, according to Business Insider, a recent survey shows that the majority of investors think that the stock market is in a bubble. The survey shows that 66% of the market is currently in some sort of bubble. That's what the investors think, or that they think it's in a partial bubble, and an additional 25% think that it is approaching a bubble. And that's a total of 91% of investors that think the market is or soon will be in a bubble. And after the last tech bubble of the late 1990s, we saw gold recover from around $250 per ounce weekly closing to about $1,750 per ounce weekly closing, which happened at the peak of its bull run, and that is a 7 times return. But over the same time period, we saw the S&P 500 recover from around 800 to about 1,200, which is only a 50% return. I can't tell you what will happen in the future conclusively. I can only tell you that it is my personal belief that gold will do very well in the future. High liquidity. One attractive reason to own gold is that it is easy to sell once you already have it. Gold has high liquidity. What is liquidity? Liquidity refers to the ease with which an asset or security can be converted into ready cash without affecting its market price. That means that you can sell it easily for the price that it says on the ticker. Let's look at 3 ways we can turn gold into cash. If you want to invest in gold through the physical gold ETF GLD, then you would buy it and sell it just like any other stock, equity, or exchange traded fund or note that you would on your brokerage account. And as we can see, there were over 8 million shares bought and sold on January 11th alone, which is quite a large dollar value. Unless you need to sell more than $1 million worth in a day, you probably won't affect the market price too significantly if you sell GLD. It is easy to buy on many popular trading platforms such as Robinhood, and it is also easy to sell as well. Getting the cash from owning it is done the same way you would get it from liquidating anything else in your brokerage account. If you sell this, the turnaround time is however long it takes for them to settle the funds, which is about 72 hours or 3 trading days for securities, and then for them to send you a check or a direct deposit into your bank account, which probably won't be more than a week. If you want to buy physical gold and gold coins, then you would need to find a buyer. And there are many reputable online dealers such as JM Bullion to buy coins and bars and other physical precious metals from you. This is not a paid promotion for JM Bullion, although I do like them. There are others I like as well, but they are one of my favorite online, and I'm happy to discuss them and others that I like in the future. This is just one example of how you can find a buyer if you need one, and you could generally expect to get what the market price is. Once they receive the product, they will pay you, and the turnaround time will be roughly what it takes to ship and process, and that's a number of factors. If you don't feel comfortable selling online, you can go to a local coin shop. I personally like the Happy Coin. The owner is very cool and knowledgeable about his products. I imagine the process works similarly in most or all states. You bring your bullion to the shop and the owners will determine whether or not they're willing to buy it, and in most cases they probably will. And they'll buy likely at market price, which is spot price, what it says on the ticker, and they'll write you a check. Once your check clears, it should be less than a week, but that's determined by your bank, and once your bank processes that, you have the cash. So if you want to know more about the happy coin, a cursory search of Google will suffice. To understand gold's liquidity, we compare it to other assets, like real estate. Gold is a physical asset you can own and touch, but it is much more liquid. To turn real estate into cash, you have to find a buyer, and then that buyer has to find financing, and it takes 30 to 60 days to close. And if it's in an all-cash buyer that you're selling to, then it would be faster, but for liquidity's sake, it cannot compare to gold. That is not to say that real estate is not a good investment. I'm simply outlining how liquidity is an advantage which gold has, but real estate does not. I hope you found this informative. Please be sure to check back in the future for more videos like this. Feel free to leave a comment below and share your thoughts with me if you like.